Good afternoon, everyone. Today is Monday, November the 27th. I hope everyone had a great Thanksgiving. I myself went out of town, so I didn't do the usual update and review that I do over the weekend. But there's not much to report, so instead of doing a whole video, I'll just mention here that we were up week over week 0.61%. Market was up 1%. This is to be expected as we don't have a full book. As we said, if you recall, we are building the book, and it's going to take us several weeks to build up to a full book, and by that time we should be burning through data as scheduled, as planned, and we should be showing a little bit better return comparing to the market. So today we're going to do another live trading session, and at the moment I'm doing 2 trades per week. It's scheduled for Monday and Thursday, and today is Monday, and we're going to do one of them. Let's take a look at the main page where we have all of our numbers, and quick look here shows us that we are targeting 849 roughly per week in sold premium, and per trade that's around 424. So that's our target for today. We are on schedule for our cost of PDS versus premium received at around 30% at the moment. This is to go down to around 20% once we have a full book, but right now we're doing a little bit more to have a little bit more protection as we are putting on trades and building up the book. So let's go ahead, and these are the numbers from today. We have a very low buying power at the moment. We have plenty of room here, so let's go ahead and jump into the account and see where we at, and then I'll just go about recording the trades and taking a look at the numbers after we put on the trades. So to start off, let's go to MES, and remember we're looking at around 90 days, whatever we can find closest around 90. So it looks like we're going to have to go with 81 days, and we are going to go to around 8-9% and see what we can get there. So at 4100, it's 17. If we go up to 5 contracts, we are looking at roughly 425, which is right on the target if we can get a fill at this price. But let's just see. Let's give it a quick try, and if not, we can go a quarter down, and then maybe we'll make up on Thursday. So let me see. Oh, these are some closing orders here that are scheduled to be taken off at 60% profit, and let's replace this one. Let's go a quarter down and see. So we're looking for 18. That would still be fine. That's we're never going to get exact number, so we just have a running numbers in our sheet that keep track of the last 4 weeks. So we want to balance out everything over 4 weeks. So if we're a little bit high on one trade and a little bit low on the other one, so long as we average around the target number, we should be fine. So we collected just under 1675 times 5, and now we're going to go and buy a put debit spread starting at 35 delta or around. So it looks like that would be right here where we already have one. So if we go for our standard 75 wide, that would be about 20%. This would be just a little bit over 20%. Remember, if you're selling 5 contracts and then buy one for the same price that you received for each one, that represents 20% of the premium. But as we said, we're building up the campaign, so we're going to be spending a little bit more. We're going to put on some extra protection. We can go for 100 wide instead and spend 22. 26 would be a little bit too much. So let's go ahead and see if we'll probably have to up it a quarter, but let's just see if we can close this off, and if not, we'll just go and replace this, go up a quarter, and see if we can do that. All right, so that's now booked, and we're gonna go ahead and record this in our spreadsheet, and you'll see how the numbers then change from that point. So we're going to call this one at 33. It's going to be MES. Today is 27, and I know you guys, if you're in States, you were doing your months first, so it might be confusing, but here in Europe we do days first, and my trade sheet is built for for putting the days first. So 27th of November is like this, but I plan to change that as well, to have both options down the line. So we sold the strike, I think it was 4,100, and that was at 81 days. We received 1675, and we got 5 contracts. So these are the numbers. This is what we collected. And then on put debit spread, on the last one, when I recorded the video, I copied, and somebody in the comments noted that I didn't correct the premium. It was just copied 27.25 to here, so it looked like I spent a little bit more for the put debit spread. Thank you for that, for noticing that. And but I corrected it now. It's 22 that we paid last time. And if we go here, 33, trade number 33, and it just so happens that this one is 33 and the naked put is 33. They're not the same trade. Remember, I'm not doing this as a 1-1-2 or anything like that. This is not a one trade. It just so happens that as we started this at the same number 30, it happens to be the same number now. But down the line, it might change, and we're not managing these trades together as one trade. They're each separate. And today is 27/11/23. The strikes, let's just, the strikes are going to be the same as the last time, but let me just, okay, so basically 4,525 and 4,425, 81 days, and we paid 22.25, did one of them. So okay, so now these numbers here are transferred over to the main sheet, and the numbers now, we have our running ratio between put debit spreads and the premium received. The cost of put debit spreads versus premium received at 29 roughly, and and for this week we have 26.57. So we are running around 30% as planned. We overspent. If we are counting 20% like it would be down the line, then we would have been over $190, but that's not the case at the moment, because we planned to spend a little bit more on the put debit spreads for the first few weeks. And then we have premium currently open. This would include all of the open trades, and the premium on them is 21.31. This is important because this also triggers our stop loss targets, and kind of gives you an idea of what would happen if you had to close the full book. But everything looks fine here, so that's all good. Now next, let's take a look real quick if there is anything that we can consider closing at the moment from our previous campaign. We don't have anything left here. These are all put debit spreads. Most of them are expiring in 3 days by the end of the week. And then here we have this rate. So let's just call this one group positions. This was 33. This is a trade 33, and then we should also have our put debit spreads somewhere in here. All right, and remember we purchased the PDS at the same strikes as we did the last time. So now what we're gonna do here, we're just gonna ungroup these real quick so that we can group them again and call them, just a second, call them 32/33, just so we remember that this is now 2 put debit spreads that are put on separately. And also on our naked puts 33, we're gonna go ahead and put a closing order for 60% and put it on. And that's all for today. And thank you very much for watching. Have a fantastic day. See you probably Thursday. Have a great week. Thanks.